Sono Sarmiento, and today is Thursday, February the 4th. Let's go quickly through our current positions and see what needs to be rolled over. So today is February the 4th, so tomorrow is the 5th. Anything on the 5th or a week after, which will be on the 12th, needs to be rolled over, or at least consider a rollover or close. Let's approach this by organizing our trades, current account trades, that's the current watch list, and organize them alphabetically, and then click on that, provided that you have this yellow icon here, will be linked to an analyze. It could be actually any icon. I just chose the yellow, it's my favorite color. Whatever, you can choose whatever you like. But if you have the same connection here, the same icon here under the Analyze tab, any click there would take you to the Analyze tab. Essentially, that's what I'm doing here. So here I see February the 26th, need to do nothing. Let's move on to this. This is Disney. I need to do nothing there either, unless I wanted to do a roll up. And I don't think I need to do that. It's not that high. If it was, say, 86 or higher, I would consider a roll up. But I already did sort of that at 175. No need to do any more of that at this point. Okay, let's move on to DLTR. February 26, no need to do anything. Let's move on to Facebook. Okay, in the case of Facebook, February the 5th, that's tomorrow. So we need to do either close the position or do some kind of arrangement. Let's take a look at the chart. Does it look like it's going down? Yeah, it looks like at any time it would crash. So I want to do a rollover because I want to be able to catch that move down. So if we were to do this rollover, I see that my longs are February the 19th. Okay, so I don't have much room. So let's analyze rolling. Yeah, I can do it to next week. Not much room left there. And I only get a credit of 10 cents. I think we need to give it a shot because I believe that the stock is weak, very weak, and it could drop considerably lower here. So I want to stay on the position and capture that. Okay, so let's do that simple rollover. And by doing the rollover, we'll go from 5.64 delta to 3.64, 4.64. So it is still delta neutral, which is what we want. We don't want to do it too delta negative, because if the stock goes up, then we're going to lose money. So try to make it delta neutral or slightly positive. So let's do that. Confirm and send. Simple rollover. And that got filled right away. Okay. And what do we have then? We have this 245 put here, which is long, and we have another here, which is matched by the, so essentially the stock will have to go to 245 for us to make additional money. Let's delete all that, and that's our current position completely neutralized. Let's go to Logitech, and that expires the 19th. I'm fine with that. Delta is positive. Do I want to roll up? I see I have 9 long calls and 9 short, and I'm sorry, 5 short long calls and 4 short calls. And then I have this call here. Let me take a look at the chart. Do I want to take profit? Yeah, I sort of want to, because it's way up here. So it almost feels like it wants to pull back. Okay, so because I have one extra call here, I can roll it up to 105 or even 110. So I click here and I said analyze rolling. Okay, so I'm moving that long call, just one of them, by selling what I have and buying a higher strike price, which in this case I want to do the 110, but we could do the 105. Let's see, buy the 105, 110. Okay, and make sure that it has the same strike price, March 19th. And then you can see still delta positive, okay? But I'm getting some money, good credit out, okay? And we could even do this other call here, which is currently at 105, this one here. Okay, let's do this first. Confirm and send. Send. And then this, there it is done. And now this 105 call, I can also move it up to 110. Analyze rolling. And that way we take profit, leave it open to further gains if the stock continues higher. And if it goes down, we will make money too by virtue of Vega gains, Vega volatility skew, volatility profits. And I'm getting 280, that's $280 as credit for my pocket. And then later, if it continues on higher, we can still sell those 110 when they reach a higher strike price. I'm going to move on. And here we have Microsoft, March 5. There's plenty of time for that. And it's very delta positive. It's equivalent to having 132 shares of stock. And it's sort of topping out. How about we sell one here? Well, if we sell one, it might turn to negative. Let's see. If I sell just one, analyze closing, and sell just one of them. And it's still delta positive, only 44 instead of 100 and whatever it was, 131. And I'm taking, let's see, $2,755 off the table. That sounds like a good deal. In case Microsoft decides that it's time to go down, it's still quite delta positive, okay? So we could even sell the other one. Well, if we sell the other one, then it would be too bearish, but we can certainly roll it up. How about that? Sell one, analyze rolling, and just one of them. The other two stay to match the short calls. So just sell one, March 19 to 15 call, and buy a higher strike price, which in this case could be 240. And that will give me big credit. Make sure that it matches the same strike price, the same expiration date right there. And so then my delta becomes 11. That's great. That's not bad at all. And I'm getting not quite the $2,700, but I'm getting $1,842, which is not bad. Okay, and it's still delta positive. Confirm and send. And we have gotten quite a bit of profit out of that. And let's move on to Qualcomm. Big drop on Qualcomm here. And I have the good sense of not doing anything, but look at that. The shorts are due to expire tomorrow, and they're 145, and the stock dropped 14 points this morning. And that gave me some profit. No, maybe not. But okay, so what I'm going to do is delta negative, and the stock is going down. And I think it's going to keep on going down, my impression. That looks like a double top. Okay, so what am I going to do? Well, in this case, I'm going to do the rollover first of all. Okay, so March 5th goes to, no, actually I don't need to do anything. March 5th is fine. I was thinking that it would be February 5th. No, they're not going to expire just yet. So let's leave it alone, okay? Give myself some time. I think the stock will continue lower. And if it reverses and go higher, we wouldn't lose too much money. Okay. And we have this 145. Yeah, that looks great. So I'm not going to do anything about it. Okay. You want to see what it was before doing anything? Hide the position. Remember last time when we did the accounting? This is truly my trade here. Okay, so we do have $1,546 so far in profits. And now it's delta negative. So I'm going to leave it alone, okay? But at some point, I'm going to have to do something because it looks quite bearish, $141. And I think it's going to continue on lower. So I'm going to leave it alone for that reason. But that's, now you're making a decision that the stock is going to keep on going lower. If you have your doubts, neutralize it, okay? How would I neutralize it? Well, how about selling one put or rolling the current put lower, or you can sell one of the see, you can sell one of the call calendars here. You have this March 21 145 call and March 5 145 call. So that's a calendar. You can close that. Analyze closing. Close the calendar, just one of them. And doing that reduces your deltas from minus 41. That's not a whole lot. So I'm going to leave it alone. We're leaving well enough alone. Let's move on to Starbucks. Starbucks is making new highs. March 5th, obviously, we had a rollover already, so we don't need to do anything there. Do I want to sell some of my calls here? We have 9 calls that are 100 strike price. Let's see, do I think that it's going to go higher? Yeah, I do. I do think it's looking like it's going to test the high. So let's leave it that alone too. We don't need to do anything about the March. There's plenty of time for them to go to expiration still. Time to go. Target, February the 12th, and that's 9 days, I think. 8 days. 8 days. Okay, so tomorrow will be 7 days. Okay, and it's going up. We can do a rollover on this one too. First of all, let's show only the simulation, which, as you remember, in the simulation we did the accounting. So this is the current trade with all the credits and debits we have had so far on this trade, and it looks like $550. Okay, so do I want to do a rollover? Yes, I do. Okay, so let's do that. Analyze rolling. That gives me quite a bit of credit here, but we're going to short the March 5th or March 12th to match the February 12th. There you go, and you get $10, almost $10 back. Confirm and send. Okay, now I am considering a few new trades, and I'm going to show them to you here in my Excel spreadsheet. I consider ENGR, and this one is not liquid enough. Okay, you would remember let's copy the trade here, copy it, and paste it here in our platform so we can see exactly what I mean. Okay, let's analyze that. And this is the current price. We can do 85 or 80. Let's look at a chart. And the stock reported great earnings, exceeded expectations. And the expectations is in the news. What they expected, it says, beat the 1.46 estimate by exceeding 175. Okay, and so I have that here in my Excel spreadsheet. 175, that's a 19 or a 20% improvement over estimate. Okay, and my current price for that trade will be 22.70, but never mind that. Let's go to liquidity. I think this is a liquidity issue, and that's the most important thing right now. The liquidity is the difference between the natural and create duplicate, the mid. Okay, that's pretty wide, as you can see, 2190 by 2485. 2190, 2485. And that's 11%, and says do not trade. And that's quite big, okay? So what happens with that is if it's not liquid, it's going to be hard to get in and get out. And you will see that stocks that you don't know very well or not familiar with, they're usually like that, very illiquid. It's not one of those stocks that everybody trades, that we need the liquidity to get it all filled and all that. So I'm going to ignore that, okay? That kills the trade, so I'm not going to evaluate any further than that. Let's go to Texas Instruments, copy the trade, and paste it here. And here it is, a trade, so let's analyze that. All right, and here we have April. You need to see how many days to April expiration. 71, that's not good. So we're going to try May, okay? Because it needs to be 90 days or so, or more. So May 21st, May 21st. And the shorts, March 5th, that's fine. Okay, I see that there is quite a bit of a skew, 31.29 versus 26.74. That's maybe too much. So we're going to go here before we do anything else, before we fill on all the gaps in my information sheet. Let's figure this out if the volatility skew may be too large. Okay, 26.76. No, that would be back months, so let's put that. 26.8, 24.33 versus 31.19 and 29.66. That's 4%. That's too large. So what does that mean? It means that we are selling, the options we are selling are cheaper than the options we are buying, and therefore it's not a good deal. And so I said, do not trade. Okay, let's suppose the liquidity and all that were okay. Would I still make the trade? Well, let's see the liquidity. Create duplicate. 34.7 versus 935.9. Mid is 34.7 versus 35.9. 3.3, that's, it says do not trade, but it's very, very close. Okay, I might still do it if the earnings difference is very big. Let's go to the chart, and right here you see the volatility, the earnings that were expecting 1.34 and they got 1.8. 1.35 versus 1.8, that's 33%. That's pretty good. Okay, what is the only other thing that I have? Liquidity is the volatility, the current IV percentile. So let's go to the Analyze tab, the Trade tab. all products, and scroll down. That was my target trade, by the way. It says current IV percentile 8%. That's good. Okay. We put an 8 here. And as you can see, 2 of the parameters are good and 2 are not. Let's take one more last look at the chart. Okay. Do I want to do this? It is very iffy, okay? So let's move on. Okay, the other one is Microsoft, which I already have a trade on, so I decided not to. And then eBay. Let's copy that. Paste it. And analyze the trade. Chart. Big spike in the morning. That's what I like. But it's been pulling back since the opening. Okay, so 68, 69 versus 86. 69 versus 86, that's a 24.6 difference. So that's really good. Okay, let's move back to the Analyze tab and say June, yes. June, 134 days to expiration, and March 12th. We can do the March 5th. Let's do that and compare. It seems to me like the volatility, let's see, March. The volatility is very similar for those two. The cost is going to be less for the March because the March is going to bring more of a credit and reduce my cost overall. And this is the trade. Okay, let's see how it compares. 32, let's see, 32.4, 33.33 versus 35.5 and 34.46. The difference is acceptable. Okay, what about the liquidity? Create duplicate. And I see here 15.43 versus 16.19 is a little too much. Okay, so we have 2 greens, 1 red. Let's see what the current IV percentile is. Let's go to trade. 20. Okay. That's a joy killer. I don't think I'm gonna do that. Okay. Okay, so we have to decide whether we want to do the Texas instrument. And I decide I don't want to do that. Okay, so let's just wait. We're still at the beginning of earnings. There will be other candidates. We have plenty of capital here to enter new trades, up to 5 or 6 of them. I would say 6 more trades possible to enter. So we just take our time, all right? The Microsoft would have been a possible candidate. Okay, so that's all for today. Thank you very much for joining me, and perhaps next time we will have some trades. Thank you. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.